Hi folks, I'm Kevin, Senior Coach at Beyond Insights, and some of you may know my wife and I, we moved to Portugal in July this year, and this is our home now. It's called the Tiny House. We're going to live here until next week, where we will move to another smaller city. So in this video, I'm going to explain to you what is a company stock split. Tesla recently has the stock split exercise in August, and I'm going to use that as an example. Now, let's explain what is the stock split. A stock split happens when a company increases the numbers of its shares to boost the stock's liquidity. Although the number of shares outstanding increases by a specific multiple, the total dollar value of all shares outstanding remains the same because a split does not fundamentally change the company's value. So the most common stock split ratios are 2-for-1 or 3-for-1, sometimes also called as 2-to-1 or 3-to-1. This means for every share held before the split, each stockholder will have 2 or 3 shares, respectively, after the split. Now, to calculate the Tesla company's value before the split on August 24th, from the data that I've extracted, the number of shares outstanding was at 1.0445 billion shares. Now, the stock price on the market close of August 24th, just before the split, was at $900. So therefore, the market capitalization, or called company value, of Tesla, you use 1.0445 billion shares times $900 per share, so you get a total of $940.05 billion. Some fun fact here from of data compiled from companiesmarketcap.com. This is the largest American companies by market capitalization of this month, August 2022. Now we see that the top 4 companies, Apple, Microsoft, Google, and Amazon, they all have $1 trillion market capitalization. And standing at number 5 is Tesla at about 950 billions. So there are 4 companies here in the $1 trillion club. Now last year, 2021, Tesla was one of the $1 trillion club member. So this year, because of the underperformance of its shares compared to Apple and Microsoft, and Tesla is below the $1 trillion market capitalization. So to calculate Tesla's stock price after the 3-to-1 stock split on August 25th, that is the day after the stock split, we take the number of shares outstanding. Now we know that every 1 stocks before the split has now increased to 3. So therefore, the number of shares now has increased by 1.0445 billion times 3. The new number of shares is 3.1335 billion shares. Now remember that the company value of Tesla remains unchanged at $940.05 billion. And to calculate the new stock price after the split, you take the company's value at $940.05 billion divided by the new number of shares at 3.1335 billion. So you will get a $300 share price. So this is a stock chart that I have prepared just before the stock split on August 24th. Now you see that the pattern of this chart remains, this is how it looks, right? And then on the day when Tesla announced the stock split, the stock itself went up by 8.2%, so it was good news. And it went to a high near 1,120. And since then, it has dropped by 45% from April to mid of May. So now you can draw support here at 625. This is what we teach at Beyond Insights. Support was at 625. Then after that, there's another support near 820. And the resistance was at 945. And there's also this downtrend line resistance as well. On August 24th, the share price was at $900. Now, a day after the split, you can see this is where the share price was at August the 25th. Now you see that the share price was at $300 instead of $900. Okay, and you see generally the pattern of the chart remains unchanged. The day of announcement, it went up by 8.2%, and since it reached a high of $370 and it dropped by 45% since the announcement, forming a support here at 208, and another support here was at 273, and then resistance was at 315. So the chart remains unchanged. So what we have learned from this stock split exercise of Tesla is that, number one, purpose of stock split is to boost liquidity by increasing number of shares outstanding. Number two, company's value remains unchanged because the split does not fundamentally change the company's value. And number three, the stock price becomes lower to make it more affordable for investors. And number four, stock chart patterns and support and resistance lines do not change.